Hi, welcome to this short video where we chat about Asia e-commerce. I'm Nathan Naidu and I cover Southeast Asia internet companies such as Sea, Grab, and GoTo. Next to me is Catherine Lim, our Asia Pac Director of Research, who covers Chinese online shopping platforms such as Alibaba, JD.com, and Meituan, etc. Now, Catherine, with most of your earnings behind you, could you tell us one key themes or maybe a few that you have seen in the Chinese e-commerce landscape?
So, Nathan, I'll tell you what stood out for me the most from the four set of results that I have looked into so far. Really, I think, with the exception of JD.com, Alibaba, Meituan, and VIP Shop, they've actually showed stronger than expected profits showing in the second quarter, and this is on top of competitions that we are seeing from various sources, and most notably, Douyin, which is going into various forms of the e-commerce to try and actually gain market share in this space. So I'm positively surprised, and it does seem to show that over the last 6 to 12 months, some of the cost-cutting measures that these companies have taken are and will filter through the results for the rest of the year. Now, you may ask, okay, so, we've heard a lot about China consumption not meeting expectations and being lackluster. Did it show in the number? And Nathan, really, we came from a low base last year because there were COVID disruptions, and clearly even delivery themselves were being affected. So now that that is over, we've actually seen selected top-line recovery. Even for Alibaba, if you actually, look into the numbers, they did restate, of course. They've actually shown a strong rebound, I would say, given the base that they are in. They're back to positive growth again for the April to June quarter. Meituan, obviously, they've actually benefited from the in-store travel, and then the food delivery volumes are also coming back. So, so far, there were no indications or minimal from the reported set of numbers, but admittedly, the outlook for these companies was somewhat lackluster. July, August to date, even for the online shopping platforms, etc., they have seen the sequential weakness. And this particular 2 months, we're off a higher base. Because if you remember, lockdowns kind of ceased in the second quarter of last year. So July, August, we're somewhat back to a little bit of that normalization. And that is what is affecting the sentiment, the retail sales that we're seeing overall, online and offline to date. So these are the couple of the big trends from China. And, going back, and if we can actually shift gear a little bit, Nathan, what about Southeast Asia? Are these something that you see similarities in the South as well?
Yeah, good point. I sense that the key theme here is actually cost cutting, which, I've seen for Southeast Asia landscape as well. The key word for me here rather is TikTok, specifically TikTok Shop. More on that later. Let's kind of wrap up the earnings. So Sea and GoTo appear to have underperformed market expectations, while Grab exceeded expectations after it pulled forward an original fourth quarter break even to now 3Q. Sea's net profit journey was thrown back into the cloud after it announced a re-acceleration of investments into Shopee that has started actually in the second quarter. This was the reason its free cash flow turned negative after staying positive for 3 quarters in a row, even though it sustained a third consecutive quarter of net profit in 2Q. But risk actually from TikTok Shop's rise to Sea and other regional platforms such as Lazada should be low, I think, given they carry a broader range and higher value categories such as electronics and home products, while TikTok Shop is very much focused on driving beauty products. Let's not forget that TikTok Shop is using plenty of incentive, promotions, and discounts to drive engagement, which is not sustainable. Southeast Asian users and merchants are prone to switching platforms. So what happens when these incentives dry up? We think GoTo, on the other hand, is most exposed to TikTok Shop's entrance, given its single largest market, i.e. Indonesia, also happens to be the new rival's biggest market. GoTo's cash also appears tighter versus other big players we track, which could limit its defense strategies. Grab has nothing to worry about since TikTok Shop is not in any of its businesses, whether it's food or mobility. Now, Catherine, who stands out to you the most in your portfolio?
Considering the competitive landscape, and, we may have touched on this, it seems like, we have a common competitor, TikTok for you, Douyin in China for us. And really, I think the company with the ammunition to really stand up, against the changes, the headwinds in China, I would still pick Alibaba. Clearly, of course, a part of that is the restructuring that they have announced, which makes it, I would say, easier and clearer for them to adjust their strategies across the many businesses that the company has. And even related to Nathan, some of your companies, we have Lazada in Southeast Asia as well. That's the unit, which is the international unit for Alibaba. That's the unit that we've actually also seen losses narrowing, the most. And it seems to fit in with what you have actually just highlighted about cost-cutting measures and how, companies are actually turning profitable earlier, etc. So, with that, Alibaba, I think some of the measures that they are taking to improve efficiency through the whole Taobao Tmall business, while considering how to actually better tackle competition from live streaming platforms such as Douyin, or even Kuaishou or Tencent's video accounts, for that matter. I'm optimistic that we will see more signs of the fruits of what they have actually put in over the next couple of months, and that could actually translate into continued positive top-line revenue growth. I will be more conservative on the profitability side for the Taobao Tmall business, that, they may actually forego some margins gains just to regain back some of the market share that admittedly they had actually lost to competition, not just the live streaming platforms, but even JD for that matter. So, same questions perhaps to you, Nathan. What is the key thing that actually stood out for you within your portfolio?
Yeah, funny you touch on profitability, because that was the reason that Grab was the easy pick for me. Not only that Grab now expects to break even earlier than previously announced, second quarter results also beat consensus estimates on all fronts. Grab Unlimited to me is the bright spot here. This subscription service generates above 3x more average revenue per user versus regular users, and its adoption for the service appears to be trending well. It was 1/3 of deliveries GMV in second quarter, up from about 25% in first quarter. Most of Grab Unlimited's revenue are expected to flow through to EBITDA. Wow. In our scenario, it's pointing to a potential $50 to $90 million boost from this service to Grab's 2023 bottom line. Thank you, Catherine. Now, for our listeners, you can find our research on BIGO or check out BioGo, BIOGO, and look up our names, Catherine Lim and Nathan Naidu, for our latest publications. Thank you for watching and listening.